Good morning, everyone. Today is Thursday, January the 3rd, and this is the Futures in 5. We are looking at these auction vacuums getting filled in here. Big support zone around 2463. Next one on the list would be 2440. Market makers have put us through the edges of 53 down here, 2453, all the way up to 2567 into tomorrow, where that particular option expires. So the next 2 days is going to be very, very interesting, but so far the market makers are trying to keep us inside of this pocket of motion, and this is what I expect also. So in our preparation, we know that we've got pullbacks that will bounce, most likely, but that they're going to run right into resistance, and the new profile that's building is showing this current area as the region to watch. So there's very little upside here until it breaks up and over this edge, 2482, 2484, and then it'll have an opportunity. Right now, it is caught in massive congestion. This has been threatening to turn over, and we can see our oscillator saying that we've got a weaker motion here that tells us that we should have some trouble up on the upper edges here. It doesn't mean that you go ahead and short because the overall motion is still bullish, but it does tell you if you're long, which is what I am suggesting that we should think about, being long into resistance, and that did really well yesterday. We'll see how it does today, but the song remains the same. Pullbacks or buy zones into resistance. We'll just see how much that resistance runs. For the NQ, same story, building in the auction vacuum. You can see the motion down, then the motion up, then the motion down again. That's what happens when we fill in an auction profile. This is resistance right up here. So once again, tough space if you're thinking about going long, because it could easily fade because of negative pressure and negative temperament in the market. But because we've got so much weighted negative motion, it's usually a contrarian indicator, which will give us these bounce action events, but we're not going anywhere. We're caught in a mosh pit. And so that's what we've got to do, is get out of that space. All right. So we'll be watching for the hold and drift up and over the 62.54, 62.56. That'll give us the pressure to put us back into these old areas of price acceptance that may end up turning into price rejection. We just have to see how much motion is there. Everything from a momentum perspective says that our bounces should sell. Taking a look at the YM, this one had a lonely start yesterday. It bounced not so fast as it should have, so it was the late one to the party, but it did take off and move very nicely into the upper edge of the auction vacuum. Now what's it doing? It's coming into the lower edge of this auction vacuum here, which is also the lower edge of this vacuum here. You can see how important it is to recover this region. 23,080, 23,090. That's a really important level. If it can't get up over there, it's going to fade, and there are a lot of spaces for this chart to fill in. Remember, at the beginning of the week, I talked about this double pocket here, which could bring us lower before another bounce. We've got very messy charts overall. A lot of people struggling with direction because we are, in general, momentum traders. Those of us that study technical analysis, we look for momentum. Here's the thing. Momentum is still there. It's just sitting on different time frames, and cycles are smaller. So in order to make money through the day, we've got to have shorter cycles that say, I'm in at this level, out at this level. Level-to-level trading is what I like in this area. Oil, looking like it's holding a bottom, finally holding a bottom. I've been talking about this thing threatening to hold a bottom forever, and it has continued to break down. Thought it was holding a bottom up here at 50, and it moved, what is that? Another 10, 12% off of that level. Now we're bouncing back. Obviously, you can see that that is going to be a region of major contention, but what the chart is trying to do in this very tight volume profile of events, it is really trying to recapture this old price acceptance area you can see this was price acceptance. It's now price rejection, which happens when we look at areas that are support that have turned into resistance. So the question is, with this higher low, do we have the upshot? My thought is, not so fast. This was likely a squeeze. It evaporated, of course, because squeezes are not really people engaging into the market. They are people closing their trades, and so that brings the fade. But if we have a higher low, there's room for movement to the upside. And so if this chart fades, let's see how it holds this heavy congestion zone between 45.40 or so and 46.20 or so. That's going to give us this region of momentum that should either sit as congestion or give us a higher low. To me, it looks like it's threatening to bottom again, but that happened last time and it gave up at these top edges and rotated downward. So we'll have to take a peek at that. Or gold continues to shine, no pun intended, but it is moving very nicely. Here's the thing, it's up at a significant resistance zone. Above that would be 1300 to 1302, and then 13.8 to 13.11, 13.12. I suspect that if the market is on a rally, we're going to see these continued wick actions that get very deep and move quite rapidly, but in the end, still give us bounce zones to look for. That's the futures in 5. Good luck trading.